Indeed, this is kind of black day for the markets, I would say, all over the world, because I mean, we have seen the plunge in U.S. stock markets, but the same in Asia and also in Europe. So this is just, I would say, the market reaction to what I think many of my colleagues in the room described as the most important paradigm shift in global trading patterns since the Second World War. That's what has happened on the 2nd of April, and of course this introduces a lot of uncertainty, lack of predictability, inflation fears, and the fact that tariffs are in the end the taxes which will be paid by the businesses, but especially by the final consumers. So that in the end increases, of course, the fears among the consumers. Can I spend so much? Will we have inflation? What would be the future of my job? Or how this would reflect on my city, on my factory, and on my family situation? So these are I would say, the debates which are now taking place, I would say, all across the world. And be it in Europe, be it in the US, and I'm not even going to tell you the distressed phone calls we are getting from emerging economies and from the developing countries, which are very much hit twice by the lack of development aid and by very high import tariffs. So this is, I think, reflected in this mood. Therefore, I think we are so careful, and therefore we've been saying from the beginning that our response would be measured, would be well calibrated, and we always add the sentence, we would prefer negotiations and negotiated solutions, because we know what kind of impact this might have on the real economy and on the real people. And therefore you see that we are really progressing step by step in this regard, but I wouldn't dare to speculate if it would have any impact on decision making across the Atlantic.
Thank you. And the last question, Kim, please.